Joining us this morning, Taylor Morrison CEO, Cheryl Palmer is back. Cheryl, great to see you again. Thanks for joining us.
Thank you. Good to see you too, Carl. Thank you.
I was just looking at the existing data that we got today. We did get a little tick up in days on market, got a little tick up in month supply. Can that be built upon?
Yeah, I was looking at it as well. It's a modest change from June numbers, Carl. I don't think anything in the data, I'd say generally pretty flat. I don't think anything in the data this morning was very surprising. As you mentioned, we've seen rates move. I think we actually have a couple things happening. We've seen rates move almost 50 basis points in the last 30 days, 25 basis points in the last 2 weeks. At the same time, because inventory is so tight, and we've seen, strong sales momentum, we've also seen prices move. So I think for the consumer trying to buy a resale home, it's a difficult environment. And then on top of that, that seller has a difficult time assisting the new buyer with, maybe support on buying down mortgage rates. And I think that's why we're seeing, new take up a higher percentage of total sales.
Right. How do you think it's going to feel moving into the off season? I mean, how are we going to think about seasonality if we're truly in a new rate environment overall?
Well, as we talked about last month, I think we have seen a bit of seasonality come back into the marketplace, and I think that's somewhat welcome. I think you've seen, as we get into the summer months, demand still quite strong, but moderated from the very strong spring selling season. So I expect a little bit more of that. Once again, when we think about the market and we think about rates, we continue with that lockup effect. Something like over 90% of mortgages today are below 6%, and I think over 60% are below 4%. So I think that's going to keep the resale market pretty tight, along with low inventory, and I think we'll continue to see good traction. But rates have moved, prices are higher. I think they're going to stay I think rates are going to stay higher for a little bit longer. So I think we should expect some normal seasonality or moderation.
And this, of course, is acutely felt for first-time home buyers, an index of housing affordability for this group, the lowest on record. What does that mean for kind of the demographic implications of the housing market as a whole as you look out a year, 2 years, 3 years from now?
Leslie, I think it's a really good question. I mean, at Taylor Morrison, we have about a third of our sales to that first-time buyer. But over 50% of our sales are to millennials. And when we look at the numbers of the millennial population and the generation behind them, I would suggest that we're going to continue to have a very strong housing market because shelter is just a need that all consumers have. The numbers are so large with this first-time buyer, even though it's a little bit more difficult to get a consumer, into a mortgage today, given the rates. I think, once again, that's why consumers are turning to new, because buyers or builders have the ability through forward commitments and buy downs on much of our inventory to help consumers get a rate that works for them. It's just reading last night 2 testimonials from 2 of our FHA buyers with a high 4% rate, and that made the difference for them to get a mortgage.